Are you seeing signs of inflation beginning to increase?
We're seeing very substantial inflation. It's very interesting. We're raising prices. People are raising prices to us. It's being accepted. I mean, it's not, take home building. I mean, the cost of, we've got 9 home builders in addition to our manufactured housing thing, and then operation, which is the largest in the country. So we really do a lot of housing. The costs are just up.
Warren Buffett's discussion highlights his deep concerns about the long-term economic consequences of current policies, specifically inflation and government spending. He notes that inflation is already surging more than expected, with prices rising across various industries like housing and steel. He sees this inflation as a byproduct of stimulus efforts and fiscal policies designed to spur growth, but warns that it could lead to serious consequences down the road, particularly for those holding fixed-dollar investments, like government bonds. Buffett believes that the best protection against inflation is personal earning power, investing in yourself and building skills that remain valuable regardless of the economic situation. He also stresses the importance of owning strong businesses that have pricing power, which can weather inflationary periods better than capital-intensive companies. He's skeptical of government rhetoric about taxpayers funding economic measures, pointing out that taxes haven't actually increased, and that much of the burden will fall on future generations and foreign bondholders.
Steel costs, just every day, they're going up. And there hasn't yet been, because the wage stuff follows. I mean, if the UAW writes a 3-year contract, we got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. So it's an economy really, it's red hot. I mean, and we weren't expecting it. I mean, all our companies, when they thought when we're allowed to go back to work, at our various operations, we closed the furniture stores. I mentioned, they were closed for 6 weeks or so on average, and they didn't know what was going to happen when they opened. And they can't stop people from buying things, and we can't deliver them. But they say, well, that's okay, because nobody else can deliver them either, and we'll wait for 3 months or something of the sort. But the backlog grows, and then we thought it would end when the $600 payments ended. It just kept going, and it keeps going, and it keeps going, and it keeps going. And I get the figures every week I call.
Buffett draws attention to how people often misunderstand inflation as an invisible tax that erodes purchasing power, impacting everyone, but especially those who save or invest in fixed-income assets. In Buffett's view, the most concerning aspect of the current economic situation is the unprecedented combination of fiscal stimulus and near-zero interest rates. While it has driven economic growth, boosted the stock market, and kept people feeling financially secure, the long-term consequences are uncertain. He warns that while everything may seem fine now, there are inevitable economic trade-offs that will surface later. Buffett also emphasizes the importance of understanding what you invest in. He admits to missing out on certain opportunities, but explains that he prefers to stick to businesses he understands and believes will have a strong future, like Coca-Cola. He advises against investing in sectors you don't fully comprehend, even if they seem exciting.
Bumpkin calls me, and we go over day by day what happened at 3 different stores in Chicago and Kansas City and Dallas, and it just won't stop. People have money in their pocket, and they pay the higher prices, and when carpet prices go up in a month or two, they announced a price increase for our costs are going up. Supply chains all screwed up, for all kinds of people, but it's almost a buying frenzy, except certain areas you can't buy yet. You really can't buy international air travel, and so the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket than except for. Meanwhile, it's a terrible situation for a percentage of the people. This suit, I haven't worn a suit, for a year practically, and that means that the dry cleaner nearest just went out of business. I mean, and nobody's bringing in suits to get dry cleaned, and nobody's bringing in white shirts. The place where my wife goes, the small business person, if you didn't have takeout and delivery services for restaurants, you got killed. On the other hand, if you've got takeout facilities, same source sales, the Dairy Queen are up a whole lot, and they adapted them. But it is not a price-sensitive economy right now in the least, and I don't know exactly how one shows up in different price indices, but there's more inflation going on quite a bit more inflation going on than people would have anticipated just 6 months ago or thereabouts.
Yeah, and there's one very intelligent man who thinks it's dangerous, and that's just the start.
Inflation is going to affect you. It's certain we will have inflation over time. And we are following policies in this country now to stimulate things, which stimulate business, which are bound to have some inflationary consequences. And to the extent that we borrow money from the rest of the world, it would be very human on the part of politicians in the future to decide that they would rather pay the rest of the world back in dollars that are worth far less than the dollars they borrowed. I mean, it's the classic way of reducing the impact and cost of external debt, and we're building up a lot of external debt. I always find it interesting when politicians now talk about using the taxpayers' money to do this and the taxpayers' money to do that, and how the taxpayers are paying the bonuses at AIG. We haven't raised taxes at all in this country. I mean, taxpayers are paying nothing beyond what they were paying a couple of years ago. As a matter of fact, the federal revenues this year, which were close to $2.6 trillion a couple of years ago, maybe more like $2.3 trillion. So we are taking less money from the taxpayers. The people who are really paying for the things we're doing now will probably be the people who are buying fixed dollar investments, much of it from the U.S. government, and who will find the purchasing power when they go to redeem those investments to be far less. So you might say that the AIG bonus is probably the Chinese are the people that are ultimately paying the most in terms of the loss of purchasing power they will have with their holdings of government bonds, U.S. government bonds many years down the road. But it sounds better to say the taxpayer than to say the Chinese are paying for it. It's an interesting situation. I read that comment every day about how the taxpayers are doing this and that. And I haven't had my taxes raised. You haven't had your taxes raised. They're giving me $250 back here pretty soon. Yet taxpayers haven't paid anything so far. And my guess is that the ultimate price of much of this will be paid by a shrinkage in the real value of fixed dollar investments down the road. And that will be the easiest thing to do. And if it's the easiest thing to do, it's the most likely thing to have happen. So you will see plenty of inflation. Now, the best protection against inflation is your own earning power. If you're the best teacher, if you're the best surgeon, if you're the best lawyer, whatever it may be, you will command a given part of other people's production of goods and services, no matter what the currency is, whether it's seashells or Reichsmarks or dollars. So your own earning power is the best by far. If you're the best journalist, whatever it may be, you will get your share of the national economic pie, regardless of the value of whatever the currency may be as measured against some earlier standard. The second best protection is a wonderful business. If you own the Coca-Cola trademark company, you will get a given portion of people's labor 20 years from now and 50 years from now for your product, and it doesn't make any difference what's happened to the price level generally, because people will give up 3 minutes of labor, 5, whatever it may be, to enjoy, a 12 ounces of a product they like. So those are the great assets: your own earning power first, and then the earning power of a wonderful business that does not require heavy capital investment. If it requires heavy capital investment, you get killed in inflation. And with those guidelines, I would tell you the best thing to do is invest in yourself.
Yes, the young man should become a brain surgeon and invest in Coca-Cola instead of government bonds.
If you discount it back, and you're discounting at present interest rates, stocks are very, very cheap. Now, the question is what interest rates do over time. But there's a view of what interest rates will be based in the yield curve out to 30 years and, so on. It's a fascinating time. We've never really seen what shoveling money in on the basis that we're doing it on a fiscal basis while following a monetary policy of something close to zero interest rates. And it is enormously pleasant. But in economics, there's one thing always to remember. You can never do one thing. You always have to say, and then what? And we're sending out huge sums. I mean, the President said it on Wednesday, 85% of the people, we're going to get a $1,400 check, or 85%. And a couple of years ago, we were saying 40% of the people never could come up with $400 of cash. So we've got 85% of the people getting those sums And so far, we've had no unpleasant consequences from it. I mean, people feel better. The people who get the money feel better, and people who are lending money don't feel very good. But it causes stocks to go up. It causes business to flourish. It causes an electorate to be happy. And we'll see if it causes anything else. And if it doesn't cause anything else, you can count on it continuing in a very big way. But there are consequences to everything in economics. But that is why the Googles and the Apples, when we don't own Google, we don't own Microsoft, but they are incredible companies in terms of what they earn on capital. They don't require a lot of capital, and they gush out more money. And if you're trying to find bonds that gush out more money from the federal government, we got $100 billion that's gushing out, like, $30 or $40 million a year, or whatever it may be, depending on the short-term rates. So that puts the pressure on, which is exactly, of course, what the monetary authorities want done. I mean, they're pushing the economy and they're doing it in Europe, even more extreme. And they're pushing, and we're aiding it with fiscal policy, and people feel good, and people have become numb to numbers. Trillions don't mean anything to anybody. And $1,400 does mean something to them. So we'll see where it all leads. But Charlie and I consider it the most interesting movie by far we've ever seen in terms of economics, don't we, Charlie?
Yes, and the professional economists, of course, have been very surprised by what's happened. It reminds me of what Churchill said about Clement Attlee. He said he was a very modest man and had a great deal to be modest about. And that's exactly what's happened with the professional economists. They were so confident about everything. And it turns out the world is more complicated than they thought.
Keynes said it many years ago that it's an invisible tax that only one man in a million really understands. And it's a tax on people that have had faith in their currency that the government's issued. That the best protection, the best investment against inflation is to improve your own earning power, your own talents. Very few people maximize their talents. And if you increase your talents, they can't tax it while you're doing it. They can't take it away from you. So if you become more useful in your activities, your profession, doctor, lawyer, whatever it may be, that is the best protection against a currency that might decline at a rapid rate. And the best investment, passive investment, I think, is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency. But it's interesting. In the United States, the value of the dollar since I was born has declined by 94% to 6 cents. So inflation is a very cruel tax on people who believe in fixed dollars, but things can work out pretty well even during inflationary times. I mean, if somebody told me when I was born, that the dollar bill is going to go to 6 cents, I might have said, let me go back. I'm not interested in emerging into that kind of a world, but actually it's worked out pretty well. So I have no complaints. Investing in yourself is the best thing you can do. Anything that improves your own talents. Nobody can take it away from you. They can run up huge deficits and the dollar can become worth far less. You can have all kinds of things happen. But if you've got talent yourself and you've maximized your talent, you've got a terrific asset. And so that doesn't mean everybody should go to college, but it does mean that any way you find to improve. Communication skills are enormously important. I mean, I took a Dale Carnegie course that I paid $100 for, and it was worth a college degree. I advise students, as much as possible, look for the job that you would take if you didn't need a job. Don't sleepwalk through life, and don't say it's all going to be great. I'll do this and I'll do that, and I'm just marking time to get to be older. You really want to be doing what you love doing. And you can't necessarily find it on your first job, but don't give up before you find it.
So you're going to make mistakes in life. I mean, there's no question about it. You don't want to make them on the big decisions, who you marry and things like that. So there's no way I'm going to make a lot of business and investment decisions without making some mistakes. I may try to minimize them. I don't dwell on them at all. I don't look back. The biggest mistakes are the ones that actually don't show up. They're the mistakes of omission rather than commission. We've never lost that much money on any one investment, but it's the things that I knew enough to do that I didn't do. We have missed profits of as much as, maybe $10 billion in things that I knew enough to do and I didn't do. Now, the fact I didn't buy Microsoft way back
is not a foregone opportunity because I didn't know enough to make that decision. But there have been other investments where I did know enough to make the decision, and for one reason or another, I either didn't do it at all or I did it on a small scale. I was sucking my thumb when I should have been writing checks, basically. And those don't show up. There's no place where it shows missed opportunities, but I've missed some big ones. The triumphs in life are partly triumphs because you know that everything isn't going to be a triumph. And I would never get too hung up on mistakes. I know a lot of people that really agonize over them, and it just isn't worth it. I mean, tomorrow's another day, and you live it forward and just go on to the next thing. The nature of what I do means I have to think pretty much independently. Because if I take a poll, in effect, I'm going to do what everybody else is doing, and I don't think much of that usually in investments. And so I have to have an environment, and I have to have a temperament personally that lets me think for myself. And I've got a terrific partner, a fellow named Charlie Munger. You can't find anybody any smarter, any better quality of anything. But we think a lot alike, and we do talk things over occasionally, but we don't talk them over very often because I know how he thinks. He knows how I think. He's taught me a lot, and why should I pay for a phone call? I know what he's going to say. So if I need to get a cabinet around to make decisions or anything like that, I probably shouldn't be running the place. And that doesn't bother me to have the responsibility for it, but I just don't want to put it up to a vote because I've seen too many, particularly in the investment world, as you get larger and larger groups making the decisions, they get more and more homogenized. And I don't think you will ever get brilliant investment decisions out of a large committee. I always look at IQ and talent as sort of representing the horsepower of the motor. But then in terms of the output, the efficiency with which the motor works, that depends on rationality because a lot of people start out with 400 horsepower motors and get 100 horsepower of output. And it's way better to have a 200 horsepower motor and get it all into output. And so why do smart people do things that interfere with really getting the output they're entitled to? And it gets into the habits and the character and the temperament, and it really gets into behaving in a rational manner. It's not getting in your own way. As I say, everybody here has the ability absolutely to do anything I do and much beyond. And some of you will and some of you won't. The ones that won't, it will be because you get in your own way. It won't because the world doesn't allow you to. It will be because you don't allow yourself to.
You want to associate with people who are the kind of person you'd like to be. You'll move in that direction. And the most important person by far in that respect is your spouse. I can't overemphasize how important that is. You're right. The friends you have, they will form you as you go through life. And make some good friends, keep them for the rest of your life, but have them be people that you admire as well as like them.
I have an old-fashioned belief that I should expect to make money in things that I understand. And when I say understand, I don't mean understand, what the product does or anything like that. I mean understand what the economics of the business are likely to look like 10 years from now or 20 years from now. I know, in general, what the economics of, say, Wrigley chewing gum will look like 10 years from now. The internet isn't going to change the way people chew gum. It isn't going to change which gum they chew. If you own the chewing gum market in a big way, and you've got Double Mint, Spearmint, and Juicy Fruit, those brands will be there 10 years from now. So I can't pinpoint exactly what the numbers are going to look like on Wrigley, but I'm not going to be way off if I try to look forward on something like that. Evaluating that company is within what I call my circle of competence. I understand what they do. I understand the economics of it. I understand the competitive aspects of the business. So figuring out the economic consequences, TV, I think there's, 20, 25 million cents a year sold in the United States. I don't think there's one of them made in the United States anymore. I mean, you'd say TV set manufacturer, what a wonderful business. Everybody, nobody had a TV in 1950. Everybody has multiple sets now. Nobody in the United States has made any real money making the sense that they're all out of business. The Magna boxes, the RCAs, all of those companies. Radio was the equivalent of over 500 companies making radios in the 1920s. Again, I don't think there's a U.S. radio manufacturer at the present time. But Coca-Cola, what was it, 1884 at Jacobs Pharmacy or whatever, this fellow comes up with something, a lot of copiers over the years. But now you've got a company that is selling roughly 1.1 billion 8-ounce servings of its product, not all Coke, Sprite, and some others, daily throughout the world 117 years later. So understanding the economic characteristics of a business is different than predicting the fact that an industry is going to do wonderfully. And so when I look at the internet businesses or I look at tech businesses, I say this is a marvelous thing, and I love to play around on the computer, and now I order my books from Amazon and all kinds of things. But I don't know who's going to win. Unless I know who's going to win, I'm not interested in investing. I'll just play around on the computer. And defining your circle of competence is the most important aspect of investing. It's not how large your circle is. You don't have to be an expert on everything. But knowing where the perimeter of that circle of what you know and what you don't know is, and staying inside of it, is all important. Tom Watson Sr., who started IBM, said in his book, he said, I'm no genius, but I'm smart in spots, and I stay around those spots. And, that is the key. So if I understand a few things, and I stick in that arena, I'll do okay. And if I don't understand something, but I get all excited about it because my neighbors are talking about it, the stocks are going up and everything, I start fooling around someplace else, eventually I'll get creamed, and I should. I met Bob Woodward, and he'd just come up with all the president's men, and all of a sudden, as a whole 30 years of age, he was getting quite wealthy. We had breakfast or lunch over at the Madison Hotel. They said, what do I do with this money? And I said, investing is just about assigning yourself the right story. I said, imagine Ben Bradley this morning said to you, what is the Washington Post company worth? What would you do if you have to write the story in a month? You'd go out and interview TV brokers and newspaper brokers and the owners, and you'd try and value each asset. I said, that's what I do. I assign myself the right story. And it's nothing more than that. Now, there's some stories I can't write. If you ask me to write a story on, what is some glamorous but non-profit making business worth, I don't know how to write that story. But if you ask me to write a story on what is Potomac Electric Power worth or something like that, I can write the story. And that's what I'm doing every day. It's been my painting for 50 some years. I get to paint what I want. I don't have to follow what Wall Street is telling me to do next quarter or something. So I own the brush. I own the canvas, and the canvas is unlimited. Now that's a pretty nice game, and I get to do it every day with people I like. I don't have to associate with anyone that causes my stomach to churn. I've said many times that if you get to be 65 or 70 and later, and the people that you want to have love you actually do love you, you're a success. I've never seen anybody that reaches that age. I mean, I'm not talking about somebody that's in extreme poverty or pain or something, but I've never seen anybody that, if they have a lot of people that love them, that is other than happy. And I've seen some very, very wealthy people that now at 86, I've seen a lot of people that have gotten older, and I've never seen anybody that is 70 or an age who felt good about their children that felt bad about their life. In all my experience, I've seen plenty of people with lots of money where it hasn't worked out well in the family. And
didn't feel good about their children.
Or the children didn't feel good about them. But whichever way. They failed at the most important teaching job they had in personal relationship. And sometimes it happens for extraneous reasons, but I really have never met anybody, regardless of their economic circumstances, who felt their life was a failure. And I knew one fellow was extraordinarily rich. He put a lot of money in his kid's name. He didn't want them to have any control over it. Once a year, he would have dinner with them and try and get them to sign their income tax return in blank. Now, just imagine that, with, in this case, 4 kids, none of them, he wanted to have enough confidence in them or to have, it's just crazy. He would rule them during this dinner and they knew exactly what was going on once a year, and then he'd bribe them sort of to sign their income tax return in blank so he could file. They wouldn't know what they had. I've seen just time after time when people have been success. I've seen plenty of the other too, but successes at business, a failure, and I don't think they feel that good about life. The whole long-term capital management, I hope most of you are familiar with it, but the whole story is really fascinating because if you take John Merriweather and Eric Rosenfeld, Larry Hillenbrand, Greg Hawkins, Victor Agani, the 2 Nobel Prize winners, Merton Scholes, if you take the 16 of them, they probably have as high an average IQ as any 16 people working together in one business in the country, including at Microsoft or wherever you want to name. So there's an incredible amount of intellect in that room. Now you combine that with the fact that those 16 had extensive experience in the field they were operating. This was not a bunch of guys who had made their money, selling men's clothing and then all of a sudden went into the securities business or anything. They had, in aggregate, the 16 had probably had 350 or 400 years of experience doing exactly what they were doing. And then you throw in the third factor that most of them had virtually all of their very substantial net worths in the business. So they had their own money up, hundreds and hundreds of millions of dollars of their own money up, super high intellect, working in a field they knew, and essentially they went broke. And that to me is absolutely fascinating. If I ever write a book, it's going to be called Why Smart People Do Dumb Things. My partner says that it should be autobiographical, but this might be an interesting illustration. And these are perfectly decent guys. I respect them and they helped me out when I had problems with Solomon, and they're not bad people at all. But to make money they didn't have and didn't need, they risked what they did have and did need. And that's foolish. That is just plain foolish. It doesn't make any difference what your IQ is. If you risk something that is important to you for something that is unimportant to you, it just does not make any sense. I don't care whether the odds are 100 to 1 that you succeed or 1,000 to 1 that you succeed. If you hand me a gun with 1,000 chambers, 1,000,000 chambers in it, and there's a bullet in one chamber, and you just put it up your temple, how much do you want to be paid to pull it once? I'm not going to pull it. You can name any sum you want, but it doesn't do anything for me on the upside. And I think the downside's fairly clear. So I'm not interested in that kind of a game. And yet people do it financially without thinking about it very much. One thing I will tell you that I didn't realize when I was getting out of school is how much the unusual person will jump out at you. And it isn't because they got 200 IQs or anything like that. It's really because of just how they behave, what they bring, the energy they bring, the commitment they bring, the quality of how they do things, how they treat the people around them, all kinds of things. But you will jump out much more than you might anticipate. One of the things you would want to be sure to do is, whether you like it or not, get very comfortable, it may take a while, with public speaking, for example. I mean, that's an asset that will last you 50 or 60 years, and it's a liability if you don't like doing it and are uncomfortable doing it. That also will last you 50 or 60 years, and it's a necessary skill. But a lot of the skills are just human skills. If you get the best out of people around you, that's a rare talent. And it doesn't correlate with IQ. It correlates with an attitude toward the world and toward other people. And it's a talent that if you work at early and you're really conscious about it, you don't have to show up other people. You don't have to be smarter than or anything else. You want to bring out the best in them. It will pay huge dividends.